you're actually coming out ahead $185 a month to own the property than to actually rent. See the data? See my point? And keep in mind, interest rates are coming down. And keep in mind, you could set a new floor for this condo. If you're a first-time homebuyer in Toronto or anywhere in the greater Toronto area, this is the opportunity you've been waiting for. But most people, are going to be missing it. The headlines right now are focusing its attention on tariffs, tons of problem in the condo market, and new record low in home sales in the last month. But we actually have a perfect environment right now for first-time homebuyers, and here's the crux of what you need to know. Fixed rate mortgages are trending down right now thanks to falling US bond yields. The Bank of Canada is very likely going to be cutting their interest rates again in its upcoming announcement next week. And there's a ton of options sitting on the market right now, especially in the condo space and entry-level freeholds. What we are seeing right now is open houses are busy. We're talking 10 to 15 families walking through, but there's barely any actual offers on offer nights. That tells me one thing. Buyers are unsure and sellers are getting nervous. This is exactly when you actually want to be buying, when no one else is pulling the trigger and you have tons of leverage and options as a buyer right now. So if you're planning to hold long-term, like 5+ years, the data says this might be your shot to get into the real estate market and set a new floor for pricing. So keep watching as I break down the current market trends and do a live example of whether you should be buying or renting in the current market right now with all the listings on the market. Hi, my name is Zen, and if you're enjoying my data-driven and number-crunching real estate updates, be sure to like and subscribe. If you're a first-time home buyer and your job and or income isn't affected by the current economic trade wars that's being presented because of the new head of US down south, this is the time for you to consider buying. A lot of our clients who are buying right now are in tech, finance, teachers, health, something to do with the government, and they really have no concern about losing their income in this current economy. Now, this isn't me as a realtor saying, hey, everyone, it's a good time to buy right now, but more of a, hey, guys, this is what I'm seeing boots on the ground. This is what the data is saying right now, and it could very much be an opportunity for you to take advantage if your income is safe from the trade wars. So let me show you the data to back up my claim and help you navigate through this uncertain time if you're considering buying your next home. I'm going to preface everything I say with this. I do not think prices are going up anytime soon. So you do not need to buy because of fear of missing out or FOMO, especially condos. If you're buying now, it's because you want to own the roof over your head and you want to be able to buy in a market where you have the advantage as the buyer, which isn't very common in the decade plus I've been trading real estate. Thinking about buying a home, but not sure where to start or even what's a good deal? Just hit the link in the description below. Tell me what you're looking at and I'll send you real-time feedback. No bots, no BS, just sharp insights to help you outsmart the competition. In this current market, you can have conditions on financing, home inspection, and status certificates. Heck, I've even seen conditions on selling another property. And with the market at all-time high of unsold properties right now, the media headline talking about how it's the end of real estate, it's going to crash, and a whole bunch of doom and gloom. This is when peak fear will be in the sellers. This is why it's time to strike. The sellers are more likely to be motivated, especially if there are similar properties for sale that serves as their competition, meaning someone's going to flinch first, who's going to drop their price. So this is your chance to set a new floor for that type of home. Whether that's the lowest price per foot in the building, which we have done recently, or the lowest price point for a freehold home in the entire neighborhood, this is the opportunity to do it right now. The conditions are here for that. The other thing is the mortgage rate environment isn't that bad either. If you're buying a property with 20% down, you're looking at like low 4s. If you're buying a property with less than 20% down, you're in like the high 3s, which means more of your monthly payment goes towards you owning your home than the interest that you pay to the bank, which we've been accustomed to in the last 2-3 years. And on top of that, if you're using less than 20% down because of the new CMHC rules, you can actually get a mortgage for 30 years now, which means your monthly payment is also lower. This is literally a very good time to buy a home if you plan to hold on to it for 5 years and plus. So let me show you the numbers right now to back it up some more. So I've picked a condo that has a lot of rentals and a lot of condos that actually have been sold in the past little bit. So this is at 88 and 100 Harbor, which is right at Union Station. There's a path connected there. Very popular building with a lot of young professionals because you can get right into the path and has a sweet gym and usually sweet views. So this unit over here is a 1-bedroom property, has no parking, it has no locker, and it's sold for $530. Now this unit is 499 square feet. You can see here, this is the floor plan for it, 499. So if you were to actually look at this on a price per square foot basis, you're looking at $1,060 price per square foot on a very, very high floor, which actually is a very good price because at the peak of the market, they were selling at $1,300 a foot. So now let me go through the photos with you. Pretty standard. You have a semi-blocked view because of the unit over here. This unit staged. Not going to critique it too much more, but it shows well. These guys had it listed at $499 over here. They held offers and it sold for $530. So you can see there's some demand there in a good looking property. For $1,050 a square foot, makes total sense. So the unit we'll be comparing is to this one, which is in the same building, 2 floors higher, exact same layout, at least for $2,300. So just here's an idea of roughly what the photos look like. You can see same layout. So now let's compare the buying of the property versus owning it because you can see it's almost apples to apples comparison. So let's look at this. If you were to buy the unit 4702 for $530,000, you can see that your taxes here are about $2,300. Your maintenance fee is about $462. So on a 20% down, you would need about $106,000. Your mortgage rate right now should be about 4.15. It could be a little bit lower, but given what I said in the beginning of this video, if you close in say 60, 90 days, there's a chance that it's actually going to be lower. So you get a locked in rate right now, and then you get your mortgage broker to price shop it for the lower amount. So on your monthly basis, you take the taxes, divide by 12, which is what you get, 197, and then your condo fees on the monthly basis. Now, if you are a first-time home buyer, you get $8,400 return. There's actually $8,475. I just put $875 here. And then all in, you're looking at $113,000 to buy this property. Now, nobody buys a property for the price. Everyone is always buying the condo or the house on the monthly amount. So this number, $2,700 a month, comprises of $2,000 monthly mortgage, your property tax is about $200, and your condo fees for about $460. So that's how you arrive at $2,700. Now, of that $2,700, if you were to actually break it out, because we're trying to compare apples to apples, right? Like how much of that actually goes to waste, right? So this is why I have it calculated as your monthly interest that you pay to the bank that you don't get any back, your maintenance that goes to the condo board to sustain the building and have a reserve fund, but you don't get any of that back, and property taxes that you pay towards the city that you won't get any of it back. However, why this number is not at 2,700 is because if you expand over here, you can see that every single month, you're actually only paying $1,400 interest of the $2,000 because the other component or the other $600 of the $2,000 actually goes to paying back your property. So you own more of it. And this number over here, the $600, gets better and better over time because the start of your mortgage is when you pay the most amount of interest. So this number here is me adding your interest payment, your property taxes, your condo fees, which you're not going to get back, but you are going to get back your monthly principal. So that's how much it's going to cost you. Now, if you were to rent this exact same unit for $2,300, which is this one right here, you can see that this number is actually higher than what you would be not getting back, which is the same thing as if you were to pay a landlord rent. You're not getting it back. So if I take this number, 2,300, subtract by the 2,100, you're actually coming out ahead $185 a month to own the property than to actually rent. See the data? See my point? And keep in mind, interest rates are coming down. And keep in mind, you could set a new floor for this condo. Thinking about buying a home, but not sure where to start or even what's a good deal? Just hit the link in the description below. Tell me what you're looking at and I'll send you real-time feedback. No bots, no BS, just sharp insights to help you outsmart the competition. This condo here was sold in February 13th, which was a much better market than it is right now. Sellers are freaking out way more than they are right now. So you can see why I'm saying this makes a lot of sense. Now, let's say maybe you don't have the 20% down. Let's use the CMHC insured program with the minimum amount of down. So in this example, your minimum amount of down would be $28,000 on 530. And when you add in your mortgage insurance that CMHC puts in, your mortgage will be $522,000. However, what a lot of people don't actually know is that because your mortgage is backed by CMHC or the taxpayers, the banks are like, well, even if this person defaults, I'm going to get paid back. So they actually give you a lower rate. It's at 3.99 right now. I've seen much lower. And I'll put the current mortgage rates on the screen right now for you. So what you see is with that new CMHC rule where you can amortize 30 years, you get a lower monthly payment. So normally it would be like $2,700 with 25 years, but now it's 25 or a little bit under that. So if we're to do the exact same math, take the interest portion, and remember, because you have less down payment, your higher interest, you take the same property taxes and the condo fees, you add it all up, your monthly amount is going to be $3,100 to carry this. However, of that $3,100 a month, $2,300 of that you can't get back, which means that you are technically behind $81 a month to buy this property with CMHC down. But here's the kicker and why it's important. We haven't had conditions like this for first-time homebuyers to buy where they have all these conditions, and you are effectively buying your first property, if you are a first-time homebuyer, for $35,000. A lot of people have that in the RSP or FHSA, and you can withdraw from that, so that's very tax efficient. So this is why I'm emphasizing, with all the data I'm showing to you, it is a very good opportunity to buy a property right now if you fit into the buckets of your income is safe, you are currently renting right now, and you plan to hold your property for the next 5 years. Go set a new floor with conditions so that you are comfortable buying the home that you want to live in for the next 5+ years. It makes a lot of sense. Now that you understand it makes sense to buy a home, if you're wondering where the biggest opportunities lie right now in this current market, I will say it's the condo townhome market. Yeah, you heard me. This is a market that's less expensive than the entry-level freeholds that, there's still competition for, but it provides you a great location for a ground-based home to effectively start your family. And a lot of these are in much better areas too. It's also kind of like that perfect in-between for those who can't make it to the freehold pricing on the real estate ladder yet. On top of that, I also think this asset type is going to be performing much better than the condo apartments in the next few years. So this is why I think this is where the opportunity is. And this is exactly what I explained in this video here. So I'll see you in the next episode. And remember, your move, your future. See ya!